The banks are in big trouble, and I'm not talking about the little slap on the wrist fines that they're paying for manipulating these markets. That's not the big trouble that they're in. That's a little slap on the wrist, pay to play action that we see continue to happen. What I'm talking about, though, is the trillions of dollars of negative or in default loans on commercial real estate that they have exposure to. And on top of that, we're also going to talk about the residential real estate market. Full update on real estate in today's episode. But these banks definitely looking some big problems and challenges straight in the face as this commercial real estate market has already imploded. We're watching the residential real estate market reset. And we definitely have some of the biggest changes in decades that we've seen in the real estate sector with the new National Association of Realtors settlement, changing how the commissions are structured now. And then we also have a new, $10,000 tax credit that Biden is trying to give away as well. And so just to give you guys the quick rundown, the two things that are really keeping the party going and keeping prices elevated are markets where there just isn't enough supply. That's really the main thing that's keeping things propped up right now. And then the second part is going to be if we can get additional tax credits and if the Fed does cut rates, right, then that's only going to fuel these prices back up even further because you have a lot of people on the sidelines that are waiting for rates to come back down before they move back in. And the problem with that is, yeah, it's going to be great, but we're only going to see the prices on these houses go back up if we continue to have a lack of supply in these markets, and if the Fed does cut rates, then you're just going to have more people coming on in. So without further ado, folks, we're going to get right on into it. Remember why we do this. This is the greatest transfer of wealth in world history. Real estate asset class, definitely going to be a part of it. So without further ado, let's get right on into it. We want you guys to be tapped in and on the right side of this transfer of wealth. Now, talking about a little transfer of wealth, a little slap on the wrist fine, the banks are not in big trouble when it comes to their widespread fraud and collusion. They just get to pay a little slap on the wrist fine and go about their business. We're talking about JP Morgan Chase, Bank of America, and 6 financial giants paying $70 million settlement over allegations of widespread fraud and manipulation, collusion. Now, I don't know which market that is. They've been caught doing precious metals. They've been caught doing any market, anything that they touch. It turns to gold for them, but it's on the back of widespread fraud and collusion. More on that later. And they better be making their money, and they better be paying those little tiny fines there, because they are facing hundreds of billions of unrealized losses on their bonds and trillions of dollars of toxic debt exposure to commercial real estate. Let's get into it, folks. So right here from Bloomberg, U.S. homebuyers expecting $10,000 savings face tough reality. Yeah, this is the problem. This is the problem, is when you expect that handout, when you expect Mr. Biden and the program and the plan to come help you out. Remember, this isn't political, guys. This is just the new, most recent action that Biden has taken to buy votes. But nonetheless, what we're finding is where the rubber meets the road is a lot different than the expectations that folks are having. What this is an additional tax credit that Biden is trying to usher in here for home buyers, and he's actually trying to do one for sellers as well too, which is very interesting. But this is on the back of the settlement that just took place with the National Association of Realtors as well, changing the structure of the commissions. Experts warn that realtor settlement changes may take time, and any impact on home prices likely to be small, economists say. I'm not going to read into the article here, but right here, the agreement drew cheers from President Joe Biden, who said it could save home buyers and home sellers as much as $10,000. So we're going to forgive your student loans. We're going to give you $10,000 to buy a home. We're going to give you some money to sell your home. We're going to give you some money if you play along, if you get along, and if you're a good little slave citizen, we're going to help you sign on to another slave deal, a mortgage, which I do understand is the path to building some wealth for most Americans, and that's why this real estate asset class is so important. Let's get it going, folks. So looking at the bond market, it had actually the yields had gone up after we got that high CPI data. That wasn't last week, but that was the week before. And so I'll show you here on the chart. This is the 2-year, okay, which had a big rise back up here to about 4.78 is where it went to. And then on the 10-year, which is where the 30-year mortgages are kind of based off of, this went all the way back up to 4.35. Now, what's interesting is that we had just gotten the average mortgage rate back below 7%. And that was, during this moment right here where yields had come back down to about 4%. After we got that hot inflation, market realized, oh crap, Jerome Powell's going to actually have to keep rates higher for longer. Yields rose here for a little bit, but then they did come back down last week. So I think that the markets are still believing that Fed Chair Jerome Powell is going to get dovish sooner rather than later, and he's going to be forced to cut rates. And so folks started to buy back up those bonds, yield coming back down to 4.2. And so it's going to be interesting to see where that average mortgage rate comes in. We're going to be watching it closely. In the residential real estate market, remember we break this up into the two segments, residential real estate and commercial. For residential, builder confidence index reaches highest level since July of 2023, driven by low resale inventory. Like I said, you need to understand your market, whether you're looking to rent, buy, or invest. Where is the inventory? Because if you have a lack of inventory, you're probably still experiencing prices going up. It's a simple supply-demand dynamics. And we're starting to see that housing starts rebound in February by largest amount in 9 months. These builders are pulling the permits. They're getting started. They're getting going, and they're trying to bring the supply on as fast as possible. Continuing on, home sales post biggest. Oh, sorry, you guys can't even read that. Let me zoom back out here. Home sales post biggest jump in a year amid wave of new listings. All cash buyers made up a third of home sales, the highest share since 2011. So we did see home sales jump here. And the reason why I'm doing this real estate update right now is that last week we got all of this data. It was a big week for real estate data last week. And we got the builder confidence, we got the permits, we got starts, and then we did get the home sales. Okay. We're going to get new home sales coming up this week, and I'll report on that further. But as far as existing home sales, that did go back up at the fastest pace since last year. This is typical of this time of year. And so this is getting interesting here. The listings are coming online, and we're starting to see the market move. This beat expectations on basically all of these points: home builder confidence, permits, starts, and home sales. Continuing on with the data, folks, this is from Zillow. New listings increased 20% month over month in February, the largest monthly gain since at least 2018. And you hone in on some of these markets like Phoenix and others, the new inventory, the new listings coming on is flooding the market. These are markets that didn't really have too much of a downtime. Remember, during the winter, it's still nice down in Phoenix. You can still move real estate. It doesn't really slow down as much as it does up north, where we're all in hibernation, all freezing up here up north, right? The monthly gain in new listings surpassed other recent increases by a significant margin. Overall, new listings are 20% higher than this time last year. Total inventory in February, the number of listings active at any time during the month, increased 3.4% from January and was 12% higher from February 2023. Here's the thing that I'm finding is that if you have cash, if you're willing to go make a move right now, now's your time to start negotiating, right? The problem, once again, it all comes back to supply. If you're in a market with still limited supply, it's still a seller's market. Prices are still going up. There's still bidding wars taking place. If you're in markets like Phoenix, Dallas, Florida, and you have cash, and or if you're just ready to move and you got pre-approval, it's your time to go beat up the builders. It's your time to go negotiate. The markets are being flooded in those areas, and it's finally becoming a little bit more favorable towards the buyers, right? And now the buyers are going to have to figure out the deal as far as, what you're going to be paying your buyer's agent. Are you going to use a buyer's agent? This is all something that has changed here within the last week or so with that new settlement that's taking place. We're seeing the data confirm, this thesis with the mortgage applications spiking and rebounding. This was reported on March 14th, but we're starting to see this here towards the end, last couple weeks here into March. We're starting to see mortgage applications tick up. Homebuyer demand is still in the basement, just as new listings are starting to spike. So this is what gets interesting, is though, although mortgage applications are back up, it's still way below, 11% below last year's level and 45% below the peak of 2022, right? This is why, I say if the Fed does cut rates, well, you're going to see a lot more people come into this market, and it's going to get it very, very interesting. Homebuyer demand is still in the basement, just as the new listings are starting to spike and the construction's picking up. It's very interesting to watch. Cocktail that suggests sellers will need to get more aggressive in dropping the price this spring. And that's what I'm noticing in my market is a lot of folks are just throwing out numbers and they're taking offers that come in. The offers are still coming in, but they are having to take a little bit off that asking price, right? And I've been watching this market very closely for the last few years and, moving my family in a position to make our move. But, my market is a market that doesn't have as much building as taking place down in Texas, down in Phoenix. We have new construction that's taking place. It's a lot of townhomes. It's a lot of apartments. And if you have a family like I do, you don't want to go move into an apartment. You don't want to do the townhome deal, right? You want a little yard for the family to run around at, And so there's a lot of supply coming on in my area, but it's not single family homes as much as we're seeing in other markets like Phoenix, Dallas, Florida, where we're seeing inventory coming online, foreclosures ticking up, and listings ticking up, new home and existing. So this is a recipe for a real estate reset in the residential market. The commercial market is already under a complete sacrifice, is already under a complete collapse. It's already imploding. And what gets interesting about this is the big banks have tremendous exposure to it. Take a look at what I'm talking about right here from bar chart. Major U.S. banks with the most real estate exposure. You're looking at JP Morgan with 1.4 trillion. 1.1 for Bank of America, 945 billion for Citigroup, Wells Fargo, 684 billion. And you can see, you go down the list, and then you look at the regional banks too. See, this is what gets interesting is these guys get bailed out, right? This group gets to pay little slap on the wrist fines and go about their business for manipulating markets. The small regional banks, those are the ones that I worry about the most. And this is where if you don't hold it, you don't own it. And you better watch out because these banks have trillion-dollar problems. And remember, this is just their real estate exposure to commercial real estate. This doesn't include residential. You are seeing foreclosures tick up. We've had a few years of basically participation trophy economy in real estate where we had the lowest interest rates in 5,000 years, and we also didn't have to pay your mortgage, didn't have to pay your rent, right? and you got student loan forbearance, and you got this deal and that deal, and you got a stimmy check. Now the rent's coming due. Now the mortgage is coming due. Now commercial real estate needs to be reset, and these folks are in trouble. And it's not just here in America, it's also worldwide, and we are starting to see the ripple effects take place. Evergrande out of China is being accused of committing fraud totaling $78 billion, making it the largest case of financial fraud in history, dwarfing that of Enron, WorldCom, FTX, and even surpassing Bernie Madoff's $68 billion Ponzi. Now, in regards to that, I said, if you think that that's a big time fraud, just wait till you hear about ETHgate. But you guys already know that deal. We talk about that in the cryptocurrency updates. In regards to real estate, you got $78 billion worth of fraud over there, folks. And the ripple effects are expanding now out into markets on the west coast of the United States. You got markets out in Australia. The Chinese investors that had flooded markets like Vancouver, Seattle, San Francisco. We're seeing them not be able to flood in like they once were. Now they're still coming. There's still a lot of money coming that way, but it's not like it once was. And this is a real estate reset, as I continue to call it, that we can see in every single segment. You're seeing it take place differently in different locations, but you're seeing it worldwide happen. We just actually watched last week, Switzerland was one of the first central banks actually in major developed economies to actually cut rates. We just saw Japan raised rates for the first time in like 15 years plus, right? Which has been a signal of a recession coming every single time that they've done it in the past like 30, 40 years. So the main drivers, that are going to bring markets down is going to be oversupply. And the second thing is going to be that recession. That's not a recession. We can't call it a recession. It's politically incorrect to call it a recession. And just maybe, they will be able to achieve the soft landing and paper this thing over. But you have to understand how much inflation comes with that. And when it comes to Main Street real jobs, we already are in a jobs recession. Remember that they already had to revise down about $1 million, a million jobs from last year's jobs totals. Every single jobs reporting that we're getting, they're revising back down. So my thesis remains that we already are in a jobs recession and that some markets are already way oversupplied. Those are the markets where price is coming down. Now, someone who bought in the last 5-10 years probably is sitting on equity. They're still going to be able to sell off and you're still sitting pretty. It's just you're not going to be able to get that peak 2022 price in a market like Dallas, which has a bunch of new inventory coming on, in a market like Phoenix, which has a bunch of new inventory coming on, in markets that are banning short-term rentals, Airbnbs, and a whole bunch of investors are about to be dumping, right? And so this is why I don't call it a crash, because you can't generally speak across the board on real estate, but why I do call it a reset, because it's a reset taking place in every single market, and you need to understand the supply demand side dynamics that are taking place in your market, along with where the jobs at in your market. And this is something that we need to understand. Like I said, whether we're looking to rent, buy, or invest, we need to understand the real estate asset class, and it's part of all of our investment thesis when it comes to where we should be putting money at right now. There's many people who are going to find that right now they're just fine renting while they stack cash on the sidelines and get ready to make a move. This year, I think, is starting to shift back towards the buyers having a little bit more leverage. And I myself am looking to take advantage of that. And I know many people as well that are sitting on cash. And I'll tell you right now that Wall Street's still sitting on a bunch of cash. Okay, Blackstone with over $1 trillion assets under management, they're still buying. Go listen to Schwartzman, the CEO, founder of Blackstone. Go listen to him speak at Davos. He's as happy as could be. Even though we report on how some of these commercial properties that they've done deals on, they're turning back over to the bank, they're defaulting on. It's a blip in the radar for their $1 trillion of assets under management. One loan that's worth $50 million, they don't care. Take the building back, blow the building up. They don't care because they're still raising billions and hundreds of billions of dollars and have $1 trillion assets under management. And they're still coming to buy up your neighborhood. What's starting to change, though, is the laws around that. So it's always a moving thing. Real estate, I love the real estate market, something that I've studied for a long time. And we're planning on moving in and investing in the real estate asset class in a major, major way. What do I focus on, though? Just like with digital assets, just like with everything else, it's the utility. It's utility housing. It's commercial properties that are, businesses and services that are always going to be in demand, no matter whether the economy's up or down. And so take advantage of this opportunity right now, folks. This is a transfer of wealth that's already started. Remember, we covered it. It's anywhere. The estimates are $50 to $100 trillion worth of wealth that's going to be passed on down from boomers. And you're talking about real estate. You're talking about stocks, companies as well. This is our time, folks. And so it's important, too, if you are in the boomer class, too. I don't blame you. I don't blame any of the boomers. God bless them. And what I want for my boomer audience, let me know if you're a boomer down in the comments down below. God bless you. I want you to be able to hand down the most amount of wealth to your children. That's my objective with boomers who are listening to us and part of our community, is I want the boomers to be able to hand down the most amount of assets and cash and equity and real estate and businesses. That's my hope. That's what I hope that I can achieve. Because a lot of the folks, thinking, well, the transfer of wealth is happening to the younger generation. Well, I want to see it successfully happen, right? I want that for you. If if your children or your grandchildren, didn't do what you told them to, or haven't been good children, and you're not including them in the will, then that's your own deal. But if you are trying to be able to hand down some wealth like I want to, we want to make sure that you get on the right side and that you're able to execute your strategies in all of our asset classes, real estate, equities, cryptocurrencies. We have our precious metals. We're prepping. We're prepared on every single level. And I just want to make sure that if you're listening to my voice here today, that first off, if you appreciate it, you smash it, you share it, and that you're able to get your family on the right side of the transfer of wealth that's already underway. We can debate how big it's going to be, but let's make sure that you're going to get your piece of that action. I appreciate everyone for stopping by. I try to keep these real estate updates coming every so often. If you appreciate the real estate updates, let me know in the comments down below, and let me know what you want me to cover in the real estate asset class next. Appreciate you. See ya. God bless. I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.